Today, I'm going to share with you how you will know if the housing market is actually really crashing. So, if you're new to the channel, I've been a mortgage lender for 18 years. My team's one of the top purchase teams in America. So, I'm looking at housing across America every single day. And what I hear a lot from clients is, oh, well, I was waiting, but I'm ready to buy now. And I'm like, well, why were you waiting? Oh, I was watching this channel and they said the market was going to crash. So I was hoping it would crash so I could get a better deal, but it's just gone up. Okay. So here's the sign that the housing market is crashing. And it's very easy. You're like, why is no one telling us this? Simple, guys. People are making so much money by getting you to click on videos that say housing crash coming, and then they show you some graphs and some bullshit studies. Same thing with the media and the news. Like, look, people like fear. People like the concept of a housing crash. It's just like whenever the stock market dips, they talk about the stock market crash of 1929. We haven't had one since 1929, but anytime the stock market dips, they're like, oh, Armageddon, it's going to be all over the depression. Oh my God, prohibition. Okay, so what is the true sign? More inventory than demand and motivated sellers. That's it. It's really simple, guys. It's so simple. It's wild. And you're like, well, wait a second. Do it again. More inventory than demand and motivated sellers. You need all of that for a housing crash. So if you look at 2008, especially, like, let's do a little history lesson. The loans that were being given out prior to then were crazy. Like, they weren't even qualifying if someone could actually afford the house. Then they were baiting them in with a portion of interest only. So it's like, let's say that I say to you, hey, your principal and interest is $3,000, but for the first 2 years, I'm going to charge you $500 a month. You're like, that's great. Well, wait a second. What's happening is the difference is going on the loan's growing. And oh, by the way, once we get to that 3-year period, you're going to pay me more than $3,000 a month because you have a bigger loan and the principal and interest have been growing, blah, blah, blah. That's what happened. Okay. And these loans had prepayment penalties. So if someone was like, oh my God, I can't do that, I'm just going to refinance, they would have to pay thousands and thousands of dollars to get out. So what happened is you ended up with a ton of foreclosures. Those loans were ticking time bombs. Okay, so what happened is the banks were like, oh my God, we've never had this many foreclosures. They just start putting them on the market. We got to get rid of it. We got to get rid of it. We got to get rid of it. And you saw that for 8, 9, and 10. Now, what started happening after that is that even though a lot of times people didn't even, like, it wasn't that they could afford the payment. It's that they saw property values going down, so they walked away from the house. There was a lot of that, a lot of people short selling their house because they're like, well, it's not as worth as much as I owe on it, so I'm just going to get rid of it. And it's like, well, wait a second, can you make the payment? Yeah, but I don't want it. Okay, so when you first had that big swoop of properties, there was more inventory than demand, and you had motivated sellers. The banks wanted to get rid of those properties, so you saw housing prices come down. So they did this for a couple of years, but then the banks were like, we got to stop doing this because we're all losing money. Okay, that's what I imagine they did. Because then what you saw is that even if someone got foreclosed on, the banks were putting it on the market immediately. So you could have someone, like, I've had clients now, it's 2025, and they're like, yeah, I had a foreclosure in 2012. And I look at the profile and I'm like, yeah, they didn't take it out of your name until 2 years ago. They're like, what? I'm like, yeah. So basically, the banks ended up in many cases keeping these properties still in that person's name. Like, I know of people who lived in houses 5, 6, 7 years without making a payment. And the reason they did that is because they stopped flooding the market. So they started doing one here, one here, one here. And that's why you started to see prices go up. That's right, because there was less inventory. Okay. So for the housing market to crash in 2025, you need more inventory than demand and motivated sellers, okay? Now, some people are going, okay, there's a lot of job loss going on. Could that lead to a housing crash? In specific markets, it could lead to housing prices coming down. Generally when you're dealing with job losses, you're dealing with specific areas. So if it's a specific area and there's a lot of job losses from homeowners and the homeowners decide to sell, you could see housing prices go down. However, here's the thing. If you're watching this and one of your friends or you lost your job, I am really sorry that that happened. It is horrible. The first thing you should do if you're a homeowner is reach out to your mortgage servicer. That's who sends you the bill every single month. Because of the disaster in 2008, where basically people, they were just selling it, kicking them out, whatever. Now, if you're at risk of losing your home, there's a lot of programs to keep you in your home. Okay, so there's forbearance where the lender does not collect payments while you get back on your feet. Is that always the best answer? No, you need to understand what happens after forbearance because your loan balance is growing. But that's what a lot of people will do is they'll go into forbearance while they find another job. When they find another job, they'll modify their loan, but they're not going to be pushing to sell it. Okay. The other thing is, look, with VA loans, if a veteran is at risk of foreclosure and they've already talked to their servicer about what's going on, VA actually has a special program now where they'll put them in a loan at a 2.5% interest rate. There's a lot of activity in all the different loan categories to keep people in houses, okay? So if you had a bunch of job loss in one area, the first thing everyone should do is talk to their servicer because they're not going to have to throw those houses on a market at a discount. They likely will be able to stay in their home while they get back on their feet, okay? So it's important that you guys recognize that. The other thing is when it comes to foreclosures, there's many states where it can take 2 or 3 years for foreclosure to actually go through. So all in all, could we see a dip in areas? Maybe. It's going to depend. Once again, inventory versus demand, motivated sellers. So where would I potentially see it? I think that there could be portions of the country where builders went a little wild, okay? And what I mean by that is they just, I think about Dallas and Houston, and in 21 and 22, it was so competitive. Seriously, builders were making a fortune. So the last few years, they've been building and building and building. Okay, now look, are we seeing that people are getting better deals on new construction in areas where there's a lot of new construction available? Yes, because once again, you have more demand, you have less demand, more inventory, and motivated sellers. Now, would I view it as a housing crash because of that? No. If I saw 5 builders in one area start publicly slashing their numbers, then I'd be a little curious. I'd be like, ugh, I wouldn't be hopping in, right? If there's 5 new construction companies and they're all going from $500,000 to $400,000, all of them, not incentives, right? The incentives are already baked in. I'm talking about dropping prices on Zillow, on Realtor, $100,000, all of them. Then I would be like, okay, clearly the demand is less than the inventory and I've got motivated sellers. So what's going on in the area? Where is the demand? What's going on with the houses that are currently for sale? Did the builders just price too high? Because sometimes you'll see that. Or is this area having a little bit of a housing crash, right? Those are the signs to look out for. Now, look, I know the videos on YouTube where they tell you there's a housing crash imminent every single day and they show you charts and data. It looks really good. But what I want you to do is I want you to look at their past. Look at the last few years of what they've been predicting and look at if they have been right. And if you look at it and they haven't, why are you listening to them, right? If I was a weather forecaster and I told you it's going to snow and it was sunny and I did that 3 or 4 times, would you ever believe my weather forecast? No. But what we see with these housing crash bros is that people do believe it because it's a fantasy they want to have happen. So look, I would look at it that way, look at people's advice, how real it's been. The headlines from the news, a lot of times you'll see these crazy things where it's like, study shows you need to be a rich kid to buy a house in America. Look at the studies, okay? I'm telling you guys, the studies, I don't even know how they qualify as a study. You know, the one that said you basically had to be a rich kid to buy a house in America was based off a study where they sent out a survey to 3,000 people, 1,200 responded, and the question was, if you're buying a house, is it likely your parents will help? Yes or no, right? Look, I have people where their parents give them $500 or $1,000. Is that help? Yes. Did my client necessarily need that? No. Are there a lot of parents that just want to help their kids because they want to be a part of it? Yes. Does it mean that you need to be a rich kid in America to buy a house? No. But is that a clickbait headline? Yes. You know, the other one I saw recently was the study shows that 73% of Americans think Elon Musk and Doge are doing a great job. And I looked at the study because A, it was really quick. And I was like, it was right after all that started. And I was like, I got to see this study. It was like of less than 30 people in one town. that is so biased and crazy and limited, but it made national headlines because it sounds interesting. People are going to click on that, but no one's clicking on the studies. So guys, please, 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 anything you see online with a headline that's scary or, oh my gosh, I can't believe this, read the article, look at the study, because what I'm finding more than not is that this is like a joke. It's like, it's a farce, right? So I hope this video has been helpful. And look, if you're looking for the sign of a housing crash, it is more inventory than demand and motivated sellers. And look, are there parts of the country where I see a lot of houses for sale, but prices aren't going down? You don't have motivated sellers. So that is the magic recipe to a housing crash. I hope this video has been helpful. If you need help getting pre-approved for a mortgage, or you want to see what you qualify for, or you want to talk about what's going on, reach out 786-933-2077. My team and I are here to help you. Thanks for watching.